Hey guys, it is Julie here with JT Wealth. In today's video, we're taking a look at 3 strong buy stocks recently purchased by one Billionaire's investment fund. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we're looking at 3 stocks that were recently picked up by billionaire Steven Cohen. These stocks were recently picked up by Cohen's investment firm, Point72 Asset Management. So in today's video, we're going to take a closer look at these companies, what they do, and what analysts are predicting for their future. And just before we get into that, I have a very exciting announcement to make. As of today, I have started doing a morning market update video directly on the TipRanks YouTube channel. This video will be going out daily, Monday through Friday, and is going to be posted pre-market. So it's going to cover everything you need to know in stock market news to get your day started right. So if you guys could do me a huge favor, all of you wonderful JT Wealth supporters, and jump on over to the TipRanks YouTube channel and check out my new morning video updates and leave some love while you're there. Okay, now let's get into these 3 companies, starting off with one that has some really interesting technology and is related to an industry that is growing quickly. That is ARRY Technologies. They trade under the ticker ARRY and are currently just shy of $40 per share at $39.83. Now, ARRY Technologies works in the solar energy industry, and they are actually one of the world's largest manufacturers of ground mounting systems used in solar energy products. They work on single-axis trackers. Now, trackers move solar panels throughout the day to maintain an optimal orientation to the sun, which significantly increases their energy production. Trackers deliver up to a 25% energy gain for about a 7% increase in project capital costs and increased production during the evening hours when electricity is the most valuable. Now, compared to a fixed tilt where it is in a fixed position and doesn't follow the sun, they offer about a 22% reduction in LCOE, or the levelized cost of energy. Solar is the fastest growing and most popular form of new generation energy, and tracker demand is growing 20% faster than the overall solar market. Right now, more than 1 in every 4 solar modules installed to date is on an ARRY product. Their next earnings report is due on March 9th, but if we look at their year-to-date from their last quarter reported, we can see some huge growth, with a 64% increase in the 9 months ended in their revenue and a 96% increase in their adjusted EBITDA. ARRY's DuraTrack maximizes land usage, and there's only 1 motor required for many rows of solar panels. Plus, their articulated driveline joints allow rows to be vertically and horizontally offset. Their technology offers the fewest number of components for greatest site design flexibility and 0 scheduled maintenance. This also comes with machine learning software that improves performance over the system's life. With ARRY Technologies, you can look to gain exposure to the largest part of the solar market with a company that can grow faster than the market and deliver strong returns for stakeholders. On top of their EBITDA and revenue, they also saw their net income increase 431% year over year for the 9 months ended in September, and their adjusted net income increased 116%. ARRY Technologies just had its IPO back in October, and in Q4, Steven Cohen's Point72 started a new position worth just shy of $20 million. One analyst covering ARRY Technologies is Shariah Pereza from Guggenheim. He seems to be confident about the company's growth prospects, noting that the stock appears undervalued. He says renewable energy companies have seen a large inflow of capital as a result of the blue wave and the Democrats' control of the White House and both chambers of Congress. However, ARRY continues to trade at a significant discount to peers. He continues to be bullish on ARRY's growth prospects, driven by tracker market share gains over fixed tilt systems, ARRY market share gains within the tracker industry, ARRY's large opportunity in the less penetrated international market, and the opportunity to monetize their existing customer base over the longer term through extended warranties, software upgrades, etc. There are 8 analysts altogether with ratings on ARRY Technologies, and it comes in as a strong buy, based on 6 buy ratings and 2 holds. The average price target is $53.75 for about a 35% potential upside. The most recent price target comes 7 days ago, and that is one of the hold ratings at $46, which is still about a 15% potential upside. Our highest price target is $60 per share from Roth Capital within 25 days ago for about a 50.56% potential upside. So some great growth potential there in an industry that is seeing great growth in itself. The second company we're taking a look at today is PAYA Holdings. They trade under the ticker PAYA and are currently at $12.70 per share. PAYA Holdings is a North American payment processing service that offers vertically tailored integrated payments and partnerships. With more than 20 years as a trusted provider of best-in-class technology and easy-to-implement business solutions, there are over 72,000 businesses that trust PAYA, and they process over 300 billion payments annually for over 100,000 customers. PAYA has their fourth quarter earnings report coming out on March 8th. Looking back at their Q3 results, we can see that they were in line with expectations, seeing about a 7.6% change in their payment volume and a 2.4% increase on their revenue. They have seen continued improvement in card volume from coronavirus lows, with continued strong revenue growth in government, business-to-business, and nonprofit verticals, with healthcare improving, however, still down year-over-year due to the virus. Now, PAYA Holdings also just went public in this last October, but they went public via SPAC through a merger with FinTech Acquisition Corporation 3. Now, in Q4, Point72 increased their position by about 4.5 million shares, bringing the total size of their position to about $54 million. One analyst covering the PAYA Holdings stock is Mark Palmer from BTIG. And he is impressed with PAYA's prospects into the midterm, writing, "We expect PAYA to generate revenue growth in the high teens during the next few years, with integrated solutions poised to grow in the mid-20s and payment services to grow in the mid-single digits. At the same time, the company's operating expenses should grow in the 5% context in our view. As such, we believe PAYA's adjusted EBITDA growth will be north of 20% during the next few years, and that its adjusted EBITDA margins will expand to 28% by year-end 2021. Now, currently, there are just 4 analysts on the PAYA Holdings stock, but all 4 of them do rate it a buy, giving the stock a strong buy rating and a $16 average price target for an upside potential of about 25%. And Mark Palmer did have the highest price target on there at $18 per share, and we have a couple recent ones within the last week, both at $15 for about an 18% potential upside. And last but not least on our list is Dicerna Pharma. Trading under the ticker DRNA, they're currently priced at about $29.30 per share. At Dicerna, they use RNA interference, or RNAi, to create medicines that silence or turn off the genes that cause disease. Using their GalXC technology platform, they develop potent and patient-friendly RNAi therapies in-house and with their partners for both rare diseases and common diseases with a genetic component. These therapies are thought to be more convenient for patients because they can be delivered under the skin and have a long duration of action. They currently have 3 drug candidates in clinical trials. These include Dicerna, which focuses on all 3 known types of primary hyperoxaluria, or PH, RG6346, which focuses on hepatitis B virus infection, and belcesiran, which focuses on alpha-1 antitrypsin deficiency-associated liver disease. Now, Dicerna was founded to specialize in RNAi, and they say that RNAi modality has come of age. It has approved products in multiple disease areas, and it's a simple and convenient dosing regimen, and they've seen multiple committed large pharmas. And RNAi delivery is extending to multiple tissues beyond the liver, getting into the central nervous system, muscle, adipose, tumor-associated immune cells, and additional tissues like disease of the lung, eye, and kidney. Dicerna boasts a strong balance sheet, and their business model has potential to fund robust pipeline growth. They've seen their year-end cash and investments grow over the last few years and is currently sitting at $568 million. For their Dicerna drug, they're expecting top-line pivotal data in the mid-year of 2021 with NDA submission in the Q3, hoping to prepare for a 2020 target launch. One analyst covering the stock for Leerink is Mani Foroohar. and he sees Dicerna as the key to the company's near-term future. He says, "We expect Dicerna could see approval in mid-2022, placing the drug roughly a year and a half behind competitor Oxlumo in phase 1. A successful outcome will transform DRNA into a commercial rare disease company in an attractive duopoly market with best-in-class breadth of label." And there are 5 analysts in total with ratings on the DRNA stock. It comes in as a strong buy, with a $38 price target for about a 29% potential upside. The highest price target does come from Manny with Leerink Partners, with a $45 price target for about a 53% potential upside. From one 5-star analyst at B. Riley, we have a $40 price target for about a 36% potential upside that just came in yesterday. So there we have 3 stocks all rated as strong buys with some pretty attractive potential for growth. Now keep in mind that those price targets are looking out over the next 12 months. So make sure you always understand your risk tolerance and especially your time frame before making any investment decision. These videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes. So always make sure you're doing your own research and due diligence. Now you guys know I always love hearing from you, so make sure to leave your thoughts in the comments down below. Which of these 3 companies catches your eye the most? If you made it all the way to the end of today's video, make sure you hit that thumbs up button, and don't forget to catch me first thing tomorrow morning over on the TipRanks YouTube channel. Thank you guys so much for watching. I hope you have a great day, and cheers.